Hello everyone, welcome to my channel hdorionn. We are studying accountancy for class 12 from T.S. Grewal's textbook 2023 edition, Accounting for Partnership Firms. Chapter 3, Change in Profit Sharing Ratio Among Existing Partners. And in this video, we will study preparation of balance sheet. So let us see some questions from the textbook. So question number 30, preparation of balance sheet. A, B and C were partners in a firm sharing profits in the ratio of 3:2:1. Their balance sheet as on 31st March 2015 was as follows. To the liability side, we have got creditors rupees 50,000, bills payable rupees 20,000, general reserve which is undistributed profit rupees 30,000, and capitals of partner A, B and C which is 1 lakh rupees, rupees 50,000 and rupees 25,000 respectively. And to the asset side, we have got land for rupees 50,000, building for rupees 50,000, plant for rupees 1 lakh, stock rupees 40,000, debtors rupees 30,000 and bank rupees 50,000, and a grand total of rupees 2,75,000. Now with this balance sheet, there are certain other information given too. From 1st April 2015, A, B and C decided to share profits equally. For this, it was agreed that goodwill of the firm be valued at rupees 1,50,000, land will be revalued at rupees 80,000 and building be depreciated by 6%. Creditors of rupees 6,000 were not likely to be claimed and hence should be written off. Now with this information, we have to prepare revaluation account, partners capital accounts and balance sheet of the reconstituted firm. So let us see the detailed explanation of this in the solution. So first we will prepare a revaluation account for question number 30. Now it is revaluation account. In this, revaluation of assets and liabilities are mentioned with the amount with which the assets and liabilities have increased or decreased. So if an asset increases or liability decreases, it will be recorded on the credit side of revaluation account. And when an asset is decreasing or any liability is increasing, it will be recorded on the debit side with the difference in the amount. Fine. So the journal entry will be respective asset account debited to revaluation account, or respective liability account debited to revaluation account, and reverse this side, revaluation account debited to asset or revaluation account debited to liabilities. It is very easy. Now the information given, first point, goodwill of the firm will be valued at rupees 1,50,000. Though goodwill is an asset, but its treatment is not done through here because we are not recording goodwill. We will be adjusting goodwill in sacrificing and gaining ratio. So we don't have to make any treatment here regarding goodwill calculated by the firm. Second point says that land will be revalued at rupees 80,000. And in the books it is given 50,000. So the value is increasing, so we will record it on the credit side. So land account debited to revaluation account, it is revalued at rupees 80,000, whereas in the books it is mentioned rupees 50,000. So there is an increase in the value of land by rupees 30,000. Similarly, building be depreciated by 6%. So building is an asset and it is depreciating, means decrease in the value of building. So it will be recorded on the debit side of revaluation account. And building is of rupees 50,000 and it is depreciated by 6%. So building is decreased by rupees 3,000. And then third point says creditors of rupees 6,000 were not likely to be claimed and hence should be written off. So there is a decrease in the value of creditors. So creditors is a liability. So decrease in liability we will record on the credit side. Creditor rupees 6,000. So this way all the changes in assets and liabilities are recorded. Now we will get the balancing figure. So we will get the balancing figure in the debit side. It means it is a credit balance, because this side it is 36,000, and in order to make 36,000 the other side, we have to insert an amount of rupees 33,000, and this is profit on revaluation. Profit on revaluation, which will be paid to the partners A, B, and C in their profit sharing ratio, old profit sharing ratio, which is 3:2:1. Because the balance sheet given is of previous year, and in previous year old ratio was applicable, so 33,000 will be broken in this ratio. So 16,500, then 11,000 and 5,500. So this profit is given to the partners in old ratio. Now for the treatment of goodwill, we have to calculate gaining or sacrificing ratio, and we know that sacrificing ratio is equal to old ratio minus new ratio. So let us calculate it for partner A. Old ratio is how much? 3/6, and new ratio is 1/3. LCM will be 6. 3 minus 2, 1/6. So because we have applied sacrificing ratios formula and it is coming in positive, so it is a sacrifice. And for partner B, 2/6 minus 1/3. LCM will be 6. It is 2 minus 2, which is equal to 0. It means partner B is getting the same amount of profit in the new ratio also as he was getting in the old ratio. So no change, neither he is gaining nor he is sacrificing. See, old ratio is 1/6 minus new ratio 1/3. LCM is 6. It is 2. No, it is 1 minus 2. That is equal to minus 1/6. So it is in minus, so it is a gain. Now, what we have to do, we will use this information for treatment of goodwill. And goodwill is revalued at rupees 1,50,000. So we will just multiply it by 1,50,000 here for the treatment of goodwill. And with this amount, that is rupees 25,000, the capital accounts will be affected for goodwill. We know the person who sacrifices, the capital account is to be credited, and the person who has gained, the capital account is to be debited. So we will use this information in partner's capital account for treatment of goodwill. So partner's capital account, credit balances are given. So by balance brought down, 1 lakh rupees, then 50,000 rupees and 25,000 rupees. Then there is a general reserve in the balance sheet. So that general reserve will be closed by debiting it. So when we are debiting general reserve, we are crediting it to partner's capital account. So general reserve, and it is of 30,000 rupees in old ratio. So when 30,000 rupees is broken in old ratio, it is 15,000 rupees, 10,000 and rupees 5,000. So it is 3:2:1. Then profit on revaluation. So by revaluation, ₹16,500, 11,000 and ₹5,500. Now we will make treatment for goodwill, in which A has sacrificed. So A will be receiving the amount. Fine. So by B's capital account, not B, by C's capital account. C is C's capital account, 25,000 rupees. And here we will write to A's capital account. We will deduct 25,000 rupees from C, because C has gained and A has sacrificed. Now all the information has been transferred here. We will close the account. To balance close down, we will get a credit balance. We will grand total it and we will put the balancing amount here. So here grand total is rupees 1,56,500. Balancing figure. And then here grand total is rupees 71,000. And here grand total is rupees 35,500. Minus 25,000, it is 10,500. So this is the balance sheet. This is the capital account, and these figures will be shown in the balance sheet on the liability side because these are credit balances. So in the balance sheet, we will write capitals of partner A, B, and C. That's the new capital which we have just calculated. Closing balances, grand total of which is rupees 2,38,000. Now look at the old balance sheet. There is creditors. So we will write creditors. It is of rupees 50,000, but 6,000 decrease is also given in point number 3. So it is 44,000 remaining creditors. Then bills payable is also there. No change in the value of bills payable means neither has decreased nor has increased, and as a result the same amount will be here. Now general reserve we have already distributed to the partners, and it is now merged in capital account, so it is already there, and only the name has changed. It is conversion of one liability into another. Now to the asset side, land's value is increased to 80,000 rupees, and building is of rupees 50,000, and we have depreciated it by rupees how much? 6,000, no, 3,000. It is 47,000 rupees building remaining. Then plant, no change in the value of plant, rupees 1 lakh, and stock, no change in the value of stock, rupees 40,000. Then debtors of rupees 30,000, and finally bank, no change in the value of bank also. Neither we have received any amount nor have we paid to anyone. Now we will grand total it, and it is 3,02,000. So this is how the question is to be solved. Now let us see question number 31. Balance sheet of X and Y who share profits and losses as 5:3 as at 1st April 2022 is. Liability side we have got capital rupees 52,000, Y's capital rupees 54,000, general reserve 4,800, workmen compensation reserve rupees 10,000, employees provident fund rupees 1,000, and sundry creditors rupees 5,000. To the asset side, we have got goodwill rupees 8,000. This is old goodwill. It is existing goodwill. Fine. And we have to remove this from the balance sheet. So this is old goodwill, 8,000. This is purchased goodwill. Only when you purchase goodwill from outside, from the market, then only goodwill will appear as an asset. Otherwise not. Machinery rupees 38,000. Furniture rupees 15,000. Sundry debtors rupees 33,000, stock rupees 7,000, bank rupees 25,000, and advertisement suspense account rupees 800. Now this is a heavy investments made in advertisement, the benefit of which the firm will receive in coming years, and therefore it is an asset. It's a prepaid deferred expense. Then on the above date, they decide to change their profit sharing ratio to 3:5 and agreed upon the following. Goodwill be valued on the basis of 2 years purchase of the average profit of the last 3 years. Profit for the years ended 31st March are 2020 rupees 7500, 2021 rupees 4000 and 2022 rupees 6500. This is the same year. Fine. So previous year's profit it is. Machinery and stock be revalued at rupees 45,000 and rupees 8,000 respectively. So machinery, you see here it is 38,000 and now it has to be increased to 45,000. It means 7,000 increase. And stock is 8,000, whereas in here it is 7,000. So stock is increasing by 1,000. Fine. Claim on account of workman compensation is rupees 6,000. We have got workman compensation reserve rupees 10,000 and claim is lesser than that, so it can be adjusted against the claim, against the reserve, and the remaining amount we will give to partners in their old profit sharing ratio. Prepare revaluation account, partners capital account and the balance sheet of the new firm. So let us see the solution. So solution 31, revaluation account we will prepare. See point B. Machine and stock be revalued at rupees 45,000 and rupees 8,000 respectively, and both are increasing. Fine. The value of it is more than what is given in the balance sheet. Machinery given in the, okay, so increasing, so by machinery I will write here, because it is an increase in the value of asset. So increase in the value of asset or decrease in the value of liability will be recorded in the credit side, and machinery is revalued at rupees 45,000 and in the balance sheet it is 38,000. Okay, so there is an increase in the value by 7,000. Difference in amount we have to write. You don't have to write this. I am writing this just to explain you for. And stock is also increasing. In the balance sheet it is valued now at rupees 8,000, whereas in the balance sheet it is given rupees 7,000. So value of stock has increased by rupees 1,000. Okay, and anything else? Treatment of goodwill. Though goodwill is an asset, but it will not be shown here, the new goodwill. And the old goodwill, that is existing goodwill given in the balance sheet for rupees 8,000 will be treated in partner's capital account. Not here, because the value is not increasing or decreasing. Fine. Okay, only this much. So we get a profit of, that is credit balance to profit on revaluation, and it will be given to the partners in their old profit sharing ratio, that is 5:3. So to partner X and to partner Y. 8,000. When you break this, X is getting 5,000 and Y is getting rupees 3,000. This way revaluation account is prepared. Now for the treatment of goodwill, we have to compare the old ratio with the new ratio, and we know that sacrificing ratio is equal to old ratio minus new ratio. So let us calculate it for X. Old ratio is 5/8 and new ratio is 3/8. So it is 2/8 sacrifice, because the answer is coming in positive, so it is a sacrifice. It means X has sacrificed 2/8 of the total profit to Y. Because Y, this is the same thing which Y will be gaining. 3/8 minus 5/8. It is minus 2/8. So it is a gain. Fine. And the value of goodwill we have to calculate now. See, we haven't calculated. Value of goodwill, it says that 2 years purchase of the average profit of last 3 years. So let us calculate goodwill. Fine. So goodwill will be equal to last 3 years profit is given to us 7,500 and how much, 4,000 and 6,500. These are the profits of last 3 years. and average we will calculate by dividing it by 3, and then to the average we will multiply it with number of years purchase. So it is 2 given in the book. So how much it is? Average profit is, it is 18,000 divided by 3 into 2. So it is 12,000 rupees is the goodwill. Now this 12,000 rupees goodwill will be multiplied here. So it is how much? 3,000. Yeah, 3,000. So because X is sacrificing, therefore X capital account has to be credited with rupees 3,000, and here it is to be debited. That we will see in partners capital account. So the journal entry we will see. Journal entry, how will be the journal entry? It is Y's capital account debited rupees 3,000 to X capital account. This is how the treatment of goodwill is to be done. That we will see in partners capital account. So by balance brought down, it is 52,000 and 54,000. Then look in the balance sheet liability side. There are undistributed profits in the form of general reserve. So by general reserve, always in old ratio. Fine. General reserve is of rupees 4,800 and old ratio is 5:3. So 3,000 and 1,800. And then next reserve is workman compensation reserve. So by workman compensation reserve, it was of rupees 10,000, but there was a claim of rupees 6,000. So the remaining amount, that is 4,000 rupees, will be given to the partners in their old ratio, which is 5:3. So when 4,000 is broken in the ratio 5:3, it is 2,500 and 1,500, that way. And employees provident fund, it is a liability. It is not a reserve or undistributed profit. It does not belong to the firm. It is a money which is for the employees, so we cannot touch it. We, in no case we have to distribute it to the partners, not here, not anywhere else. In the admission, retirement, death of a partner, nowhere. It is an outsider's liability, so leave that. And then old goodwill we are having. So old goodwill is a debit balance. It is shown in the asset side, so it will be credited in the debit side of partners capital account. It is 8,000 and in the old ratio 5:3. So 5,000 and 3,000. Old goodwill is always treated in old ratio, that is 5:3 here. Then advertisement suspense is also there. So to advertisement suspense, here also it is in old ratio. So 500 and 300. Now treatment of goodwill, in which who has gained, X has sacrificed. So X has sacrificed. So by Y's capital account, rupees 3,000, and here to X capital account, now we will close it to balance close down. So one more thing we forgot to write is by revaluation account, 5,000 and 3,000. So here grand total is 65,500. To make it 65,500, we have to insert an amount of rupees 60,000, which is the balancing figure. And for Y, it is 60,300. and the balancing figure here is 54,000. So these are the balancing figures, or these are the capital account balances which will be shown in the new balance sheet, not this one. In the balance sheet, first we will mention capital for partner X and Y. 60,000 rupees and 54,000 rupees. It is 1,14,000. Now in the liability side, general reserve, workman compensation fund reserve, we have already transferred to capital account. Then employees provident fund is there. Employees provident fund. It is an outsider's liabilities, and therefore we have to mention it here. Then sundry creditors, rupees 5,000 as it is. And to the asset side, goodwill, old goodwill rupees 8,000 has already been transferred to capital account. Then machinery, it is 45,000 rupees now. Earlier it was 38,000. Furniture, no change in furniture. It is 15,000. Sorry, 15,000. Then sundry debtors, no change in sundry debtors, 33,000 rupees. Then stock, value of stock has increased to 8,000 from rupees 7,000. Bank, no change in the amount of bank, rupees 25,000. And advertisement suspense account we have transferred to partners capital account, so need not to mention here. But one more thing is there, workman compensation claim. Workman compensation claim. So it is how much? 6,000 rupees. That much only. Now we will grand total it, and grand total is rupees 1,26,000 on both the sides. So this is how the question is to be solved. I hope that you have watched the full video and heard the explanation here. If you are having any doubt, then please put it in the comment section. I know you are liking my video. Thank you so much for liking, subscribing and sharing this channel. Thank you so much for liking this video.